JFD, just fair and direct. JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 25th of February 2020. So yep, welcome everyone. Welcome to this Tuesday's afternoon session where we're going to have a quick look at the markets, a few of the charts, a few interesting setups. But as always, before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, just before we jump in, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we update on a daily basis. So yeah, guys, feel free to visit us here on jfdbank.com and click on the research page right there on the top, and yep, it will take you to our page, which where you can find some useful information. Now then, let's jump into the charts. Now the first one I want to touch on here is the S&P 500. Now looking at this one, I mean, as you understand, yesterday the markets did sell off quite heavily, and yep, we saw the index closing below this this key area here. Now below this key upside support line taken from the low of the 3rd of October, and the closing there we go. The close happened near this key area of support around the 3,215 territory. So basically, looking at the cash index right now, we can see that this morning the indices did try to recover a little bit, and looking at the cash index, it is currently balancing around the 3,241 territory. So basically just around here somewhere. So in a way, this kind of is currently seen as a nice healthy correction, but of course the whole negativity is still in the air, and we could see this one drifting further south. Now looking at this picture here on the 4-hour chart, you can see that we have a few interesting areas of support. Now the one of which of course is this 3,215 territory. We need to see a nice good drop below this in order to aim for lower levels, because this would confirm forthcoming lower low, and yep, we could then test the area around the 3,191 zone, which is the low of the 18th of December. Around there also you can see we have the 200 EMA on the 4-hour chart, which could also be tested. And to be honest, if all this kind of still fails to provide decent support, a break of it could lead towards this next potential area of support around the 3,154-55 zone, roughly around here, next marked near the high of the 27th of November and near the low of the 13th of December as well. So keep your eyes on that one, guys. But again, for now, we will consider this level first, the 3,191 zone, especially if it drops below this 3,215. And just to kind of point out the significance here is that's the lowest point of January. So if we see a drop below this, then yep, this is not only that it breaks below this lowest point of January, but also creates a new low for February, and yep, confirms a forthcoming lower low. In terms of the upside, we would need to see this one climbing back above this upside support line taken from the low of the 3rd of October, and only then we could maybe reconsider a potential move back to the upside. For now, the upside is slightly off the table unless it's a temporary correction, so keep your eyes on that one. Gold. Now, this morning I talked about gold, and what I was saying that if we see a drop below this 1649 territory, then yep, this increases the chances of a further drift lower. But as you can see, the bulls are really fighting it hard and really trying to keep this one afloat. For now, yes, they've managed to, in a way, kind of succeed partially. They've managed to push this the price back towards this little area here between the 1649 and 1652 zone, but still you can see that it's kind of moving around here, moving sideways. For now, we'll keep an eye. What we're going to do here is we're going to keep an eye on this 21 EMA here, shown as the yellow line on the 4-hour chart. If you can see that we keep getting overshoots here, but we don't even get at least a close of a 4-hour candle. So what we could do here is just consider the downside, at least, or should I say a deeper correction to the downside, if we get a nice good 4-hour candle close below this 21 EMA, and then yes, we could aim for these slightly lower levels like the 1612, or even going towards this upside support line taken from the low of the 13th of December. So for now, keep your eyes on this one. In terms of the upside, well, in order to be on the safe side now, we would like to see a push above these recent highs here near the 1685, and this recent high, which is, let me just put this one on the chart very quickly, which is the 1689 zone. So a nice good push above that would confirm a forthcoming higher high, and yep, more buyers could be joining in. For now, be very careful, be very cautious here, guys. From our side, we're kind of slightly on the neutral side here because we want to see what he wants to do around here first. Now, jumping into DXY very quickly, I was talking about this one last week especially, and basically what I was saying that I was putting the emphasis on this little level here, the 99.23 zone. So as you can see, we keep getting these overshoots here, but we don't get a 4-hour candle close below this. So in a way, this is what we're looking here for in order to consider further declines. You can see that the index recently kind of respected this downside line and continues to respect that downside line. So in a way, on the other hand, we are getting ourselves something of a descending triangle, which according to textbooks tends to break to the downside. But as I said, we need to see that that nice good close, at least a 4-hour candle below this 99.23 zone before considering lower areas. Then our next target could be around here, near the low of the 11th of February, near the low of 12th of February as well. And that's roughly around the 98.71 zone, so something to keep an eye on. In case this suddenly pushes back to the upside, well, what you could do here is, of course, keep your eyes on this little short-term downside resistance line that I've drawn here right now, but just to be on the safe side, keep your eyes on the 99.66 area, which is the high of yesterday. Now, a nice push above this could, in a way, open the path towards higher levels. We could then target the highest point of last week near the 99.91 area, and then, yep, we'll take it from there, because slightly above that, we do have that psychological 100 level, the long-awaited 100 zone, which could be a nice test as well. But again, in order to aim for slightly higher levels here, we need to see a push above the yesterday's high near the 99.66-65 territory. So keep your eyes on that one. Jumping into some cryptos, which in this case here, Bitcoin Cash. I looked at this one last week, and basically I was telling you guys to keep a close eye on this little area of support. Now, and that's roughly around the 363.35 area, so roughly around there, guys. Basically, as you can see, we continue to balance above it. So what we need here is a nice good drop, a strong move below this. Also, in addition to that, we would like to see maybe a drop below this little territory here. Let me just put this one on the chart. There we go. The 354.55 territory. So in a way, a nice good strong move below this would confirm a lower low, and yep, could in a way potentially open the path towards this key area of support around the 300 mark. Now, plus minus here a few points here and there, 4 points each way. We do have the 304, 305 zone here as a good potential target as well, or the 296 territory future as well as a good potential area of support. So in other words, this area around the 300 mark, that could be our nice target. If we get a nice good strong move below this, initially below the 363 territory, and then below the 355 zone, or even ideally we would like to see maybe a close at least of a 4-hour candle below this. But again, for now guys, we're keeping an eye on this one. In terms of the upside, well, we could start considering higher levels if we get a push above the 393 territory. But as you can see, slightly above that, we do have the yesterday's high, which is around the 409 zone. So in a way, a nice good push above that could, in a way, open the door towards slightly higher levels. But again, for now, it's closer to the downside, closer to some key areas of support. So let's see if these can get broken. NZDJPY. Now, very quickly on this, NZDJPY. You can see that I've looked at this one a while ago, and kind of after it broke this nice upside support line taken from the low of the 2nd of October, it kind of started drifting to the downside, continued to move so, and recently, and let me just actually remove all the drawings here, recently kind of started moving sideways here, let me just put some lines here on the chart. So basically roughly between the 69.92 territory on the downside and roughly around below the 71.34-35 zone. So basically it was stuck in this little range here, and today we're seeing a strong move lower where the pair is finally breaking this 69.92 territory, and in a way you can see that the bulls did try to push this one higher, but kind of at one point they managed to overcome this barrier again from the downside here and push it above, but still you can see they're struggling to maintain the rate above this line, above this hurdle, and that's why for now we're going to be leaning more towards the downside, and in a way if it continues to trade below this territory, and let me just quickly mark that for our future reference, we'll pick up on this pair later on this week just to see how it performed going further, but if it continues to trade below the 69.92 territory, then yep, the next area to consider could be around here near this low of the 20th of November of last year, and that's around the 69.25 zone. So good potential target, good potential area of support. Of course, don't get me wrong, we do have some good levels underneath here as well, but let's keep it short and simple for now. Let's mainly target this 69.25 zone if the rate continues to balance below this 69.92. In case this decides to push back higher and makes its way above the 70.53 mark, then well, this is where we will aim for the 200 EMA here on the 4-hour chart, or even this 71.35 zone, which is roughly around the upper bound of this range here that we had previously. So again, for now, in order to aim for the upside, at least for some higher levels, we need to see a push above this barrier here, the 70.53. For now, we're more bearish than bullish on this one. USDCHF, very interesting pair, very interesting area that is getting a hold up at. You can see that previously this level here, the 0.9762-63 zone, acted as a good area of resistance back here in January, and then in the beginning of January, and then the end of January. Now it's acting as a good area of support, and also almost coincides here with the 200 EMA on the 4-hour charts, which also kind of is providing a bit of support here, as we can see. So in other words, we need to see a nice good strong move below this area, below the 0.9762, in order to kind of aim for the downside, in order to aim initially for this little area of support here near the 0.9735, which is the low of the 12th of February. But if that fails to withhold, then yes, lower levels could be met, and then we will aim for the 0.9713 zone. But again, like I said, first we need to see a drop below this little level, below the 0.9762. In terms of the upside, now we could start considering slightly higher levels if we get a push above the 0.98 mark, which is the high of today, by the way. And if we do get a push above this could also place the rate above the 21 EMA here, and maybe more buyers could see this as an opportunity to step in. But also this would also place the rate above this downside resistance line taken from the high of the 20th of February. But that's of course in terms of the upside here. So that's why we're gonna keep an eye on this level first, on this 0.98 zone, in order to consider slightly higher levels. For now, you can see that we do have somewhat of a descending triangle here pattern forming. So these tend to break to the downside according to the technical analysis rules. But again, we need that confirmation break first before we could consider such an idea. So keep your eyes on these two levels, guys: the 0.98 level on the upside and the 0.9762 on the downside. And finally, euro dollar here. So it hasn't moved much, to be honest. I mean, this morning it was trading around here, around the 1.0860 zone. It drifted a little bit lower, as you can see, tested the 21 EMA here on the 4-hour chart and kind of rebounded from there. But basically, I'm going to stick to the same idea here as I've mentioned this morning, that in order for us to get comfortable with higher levels, slightly higher levels, I should point this one out, we would need to see a nice good push above the 1.0878 zone, which is the lowest point of 2019. Now you can see it's playing the role of resistance, so a nice good push above that could in a way lead to a larger correction, because don't forget we're still below this downside resistance line taken from the high of the 31st of December. In terms of the downside, the same idea remains. A drop below the 1.0777 could do the trick. And if you want to join me tomorrow morning, as always, at my Traders Espresso, 7 o'clock GMT time. For now, I hope you have a beautiful, beautiful evening, and I'll see you later. Thank you very much, and bye-bye.